Hey there, it's Dave with Flipper Force. Got open our newly revamped Flip Analyzer tool that you can use for analyzing your house flip project. So I'm just going to briefly walk through a quick analysis and then just touch on some of the new improvements that we made to the Flip Analyzer tool here. So you can see it's pretty similar to our old version. It's basically a step-by-step process that has 6 steps to it, and those 6 steps are really based upon our profit calculation formula over here. So you can see it's the after repair value minus your purchase cost minus your repair costs minus your buying, holding, and selling costs, and then minus your financing costs equals your profit. So as you enter these values over here, it'll start to populate your profit calculation and calculate your profit that you'll make on the deal. So the first step is going to be your after repair value. So on this property, let's just plug in $300,000. So after we renovate the property, we think it'll be worth $300,000 here. The next step is the purchase amount. So one of the first things you'll notice is that you can quickly navigate in between the steps. So in our previous old version, basically each step was on its own separate web page. So when you tried to navigate between steps, you'd have to wait for the page to load. So now you can just quickly navigate in between steps by clicking the next button or just using the step-by-step process up there at the top. So we think that new one-page setup versus the multi-page setup for each step is going to be a lot more user-friendly for you and help you quickly navigate in between your different steps and just make it that much faster for you to analyze your deal. So the purchase price amount, this is how much you think you can purchase the property for. So maybe the seller is asking $100,000, but maybe you're hoping to get the property for $80,000 or something like that. So you can plug in either the seller's asking price or what you think you can negotiate the price down to. So let's plug in $80,000 for this property. And then the next step is going to be the repairs. So repairs, you've got 3 different options on how to set that up. You can just quickly plug in $50,000 or whatever that budget is directly into the cell. So if you've got cost history that says, based upon what I know about this house, our budgets are somewhere between 40 to 60,000, you can quickly just plug in a lump sum number there and just kind of use that as a placeholder until you find out more information and put together a detailed estimate. Otherwise, you can use the dollar per square foot amount or the detailed amount. So the detailed amount, pulls over from the repair estimator here. So if you put together a detailed repair estimate and scope of work, that will populate over here. So let's just use our detailed estimate here. So we've got $55,000 for the estimate. Another thing you'll notice is as you're going through this analysis, we've got this live highlighter, which is where it's going to tell you exactly where you are in the analysis process. So that's going to help provide a little bit more clarity on what these values are doing and where they go into the overall profit calculation of the deal. So you can see after repair value, that's the first step. And then we're going to be subtracting out our purchase costs, our repair costs, and as we navigate through this process, it's going to live highlight where you are, so that way you always know why you're analyzing those certain costs or how those costs are affecting your profit. So now we're on the fixed cost tab. So this is just your buying costs, your holding costs, and your selling costs. So really costs that you're going to incur on all of your projects. We've got a couple different ways that you can calculate these costs. You've got a lump sum option. So if you just want to quickly plug in a lump sum value for your buying costs, you could do it that way. Or you could use a percentage of the purchase amount. So you can see we currently have 2% plugged in there. Buying costs are generally going to be probably 1 to 3%. So 2% times 80,000, which is our purchase amount, is equal to $1,600. Or you've got a detailed option. So these detailed options just give you a detailed breakdown of every single cost that you want to calculate in your analysis. So you can add in additional ones here. You can delete the ones maybe that you're not using. You can change these to a percentage. You can change them to a lump sum, whatever you want to do to calculate your costs. And then same thing with the holding costs. You've got the same options there. You can do a lump sum, you can do $1 per month, or you can do a detailed breakdown. So one of the things you'll notice on the holding cost section is we did break out the holding period timeline. Previously we only had one entry, which was basically for the overall holding period. So now we've got a breakdown which will break it down so that way you can say, I think it's going to take about 2 months to rehab the property, and then once we do get the property on the market and listed, it's probably going to take another 2 months to get an offer on the property and then finally go through all the paperwork and get the property sold to the end buyer. So Ultimately, we've got a 4-month timeline, and then that 4 months is going to be used to calculate our holding costs. So if we just wanted to quickly do the dollar per month, we could just say maybe it's $1,000 per month times 4 months is equal to $4,000 in holding costs. Or you can do a detailed breakdown here. So you can see we've got some pre-populated holding costs here for property taxes, utilities, insurance, maintenance, stuff like that. And you can see we've got the values plugged in as $1 per month, or you can also do it as $1 per year. But basically $200 a month times our total timeline here of 4 months is equal to $800 a month. So that's one of the things that we did add with our new improvement, was we didn't have a total column previously. So we think that's going to provide a little bit more clarity for you, because otherwise it didn't really tell you how those values were being calculated. So having that running total column over here, so that way you can see how much your totals are for each item that you're breaking down in this detailed list, and then your total down here is going to provide you with a little bit more information and hopefully provide more clarity on that. Otherwise, we've got $2,600 for our holding costs here. And then the next section is going to be your selling cost. So again, you can do a lump sum value, you can do a percent of the resale value, so 8% times $300,000, which is our after repair value, is $24,000 in selling costs. Or again, you can go the detailed breakdown route. So if you want to break out the sales commission, stuff like that, you can break that out so you can see what that percentage is. So maybe it's going to be 5% here, or 6% times 6% times $300,000 is going to be $18,000 for the sales commissions to pay your agents. And then you can also break this down by a lump sum, percent of resale. So again, these detailed breakdowns of costs are completely customizable. If you want to do it as a percentage or a lump sum, you can do that. You can add in additional ones, you can delete the ones that you're not using, stuff like that. So now we've got all of our fixed costs calculated. You can see we've got $1,900, $2,600, and $23,000 for our selling costs. The next step is going to be our financing costs. So this is going to be what you can use to set up the financing that you're going to be using on the deal. If you are a cash buyer and you're going to be paying cash for the property, you really don't need to do anything here. You can just move on to the final step. If you are going to be using outside funding from a lender or a partner or something like that, you'll want to select a loan. So we did some changes to the loan setup that I think will make it a little bit easier for you if you're working with a hard money lender that offers a loan amount with multiple LTVs. So I think a lot of hard money lenders, they actually lend about 70 to 80% of the purchase amount, and then they give you 100% of the repairs. So that's pretty typical in the hard money lending industry, is to lend up to a certain percentage of the purchase amount and then give out 100% of the repairs as rehab draws. So our new setup here, we've actually got 2 LTVs. Previously we only had 1 LTV, so it made that process a little bit more difficult. So adding in that second LTV will allow you to set up those funding strategies that are typical for hard money lenders. So you can see our purchase amount is $80,000. 80,000 times 70 is equal to $56,000 for the purchase. So basically what that means is if you are buying the property for 80 and they're only giving you 70% up front, they're only going to give you $56,000 up front. So you're going to have to come up with the $24,000 difference up front, so essentially a $24,000 down payment, and then they're going to provide the loan for 100% of the repairs. So the $55,000 in repairs, they'll likely provide that as a draw. So as you spend the money, they're going to be reimbursing you for the expenses on the project. So you can see $56,000 here plus $55,000 for the repairs is a total loan amount of $111,000. And then you can set up your loan terms here. So a typical hard money lender rate might be anywhere from 9 to 13%. We've got our monthly payments, so the number of payments that you're going to be making to the lender. So that might be 4 months if our timeline's only 4 months on this project, or maybe they require you to make a minimum of 6-month payments. However, they are requiring you to make a minimum number of payments. You might have to make that 6 to 12 months, whatever that is. Points here, you've got 2 percentage points. So I think 1 to 3% is typical. So we plugged in 2% here, and then other costs are going to cover any kind of other like costs that the lender might charge for rehab draws or rehab inspections, stuff like that. So you can see our total financing costs here are $9,990, and we've got our final profit amount is now calculated. So you can see we've got the after repair value of $300,000. We've got our purchase amount at 80, subtracting out our repair costs, our buying, holding, and selling costs, and then our financing costs. So we're actually making a pretty good profit if we can get this property for $80,000. So we've got a profit here of $127,510. And so the final step is the desired profit that you want to make on the deal. So you can see the app has calculated the profit results based upon a known purchase price. So under the assumption that we might be able to buy this property for $80,000, if we're able to buy the property for $80,000, then we should be able to make $127,000. But it's also going to calculate your recommended maximum purchase price based upon how much profit you want to make in the deal. So in a competitive market like we've got today, you're going to be more than likely bidding against other house flippers on the project. So there's a very good chance you're not going to be able to make this much margin or this much profit on the deal. So you're probably going to have to try to sharpen your pencil here and make a more competitive offer. So that's really kind of where this desired profit amount will be used to calculate your recommended maximum purchase price. So I guess, for example, let's say that you want to make $30,000. So on every flip you have a minimum that you want to make, and that's $30,000. Well, you'd plug that in here, and if you'd be satisfied with a $30,000 profit on this project, you could actually offer up to $177,000. So you can see that's obviously a lot different than what the purchase amount was that we currently plugged in there, which had our profit at $127,000. Well, if you only want to make $30,000 on this deal, you should be able to offer up to $177,000, and you'd make $30,000 on the project. You can also set it up as a percentage, so maybe you have a minimum of $30,000, or you have a minimum of a percentage of the resale value, or ARV. So 15% of $30,000 is a $45,000 profit. So you've got a couple different ways that you can calculate the recommended maximum purchase price. But basically what that's doing is it's calculating the recommended maximum purchase price based upon the profit that you want to make on the deal. So that's a quick overview of our new flip analyzer here. Again, it's just basically a new one-page setup, so that way you don't have to navigate between all those different 6 pages on separate pages, which I think will make that process of analyzing your deal a lot more seamless, a lot easier, and hopefully a lot quicker for you. We also revamped the detailed fixed costs area, so that way you can have a little bit more clarity on how your detailed buying, holding, and selling costs are being calculated. And then on the financing side, we've added in some additional options for you, so that way if you are working with a traditional hard money lender, our new LTV setup that we've got going on here should make that a lot more accurate for you and a lot more easy to set up. So what we've got going on next is, once you finish your results here, it does take you to a results page. So we've got some things that we're going to be improving over here on the results page, some new information that we're going to be adding in here to just provide you some more information on how your capital is being spent, stuff like that. We are going to be also adding in a new area to the financing section. So this is just going to be kind of an advanced financing section where you can set up how the loan payments are made. So you can set up if you're receiving the rehab amount. Some lenders will give you all the money up front. Some lenders will issue the loan proceeds as draws, so you'll be able to select that kind of information down here. You'll be able to set up whether you're paying the points up front or paying them on the back end. You'll be able to set up your interest. Some lenders will allow you to pay all of the interest payments at the end of the project. Some of them want those interest payments to be paid monthly, and those advanced loan options are really going to be used on our new results page. You'll be able to see your project capital over time, stuff like that. And then I think the final thing that's going to be a major improvement that we're going to be launching here in the next couple weeks is the ability to save your default settings. So I guess, for example, on these buying costs, holding costs, and selling costs here, We've got a detailed breakdown, and if you've got typical costs that you're always running into on all of your projects, you don't want to have to redo this setup every single time you analyze a new deal. It'd be nice to save your own default settings on all of these costs on the way that you analyze your deal, so that way you don't have to redo it every single time. So we'll be adding in those default settings as a new feature as well, which again should save you a whole bunch of time, so that way you don't have to re-enter that information, and you should be able to just quickly analyze a flip project in a matter of minutes and put together a very detailed analysis to determine how much you should offer for the property. So that's a quick overview of our new flip analyzer tool. If you have any questions or anything, let us know.